go, guys. And once again, happy spooky season. I'm really grateful to be in business with all of you. Let's welcome our special guest, Alex, to the room. Thank you so much for being here.
You guys, bring up your ears, pay attention, put away your phones. This is crucial information.
This is crucial.
Crucial information, right?
No pressure, right? You just like, but you know what? One thing I did want to share though is that I don't go to many offices, right? But this one's a little different in the sense that you feel like a hug. So it's a different environment, easy going. You know what I mean? It's not so. Yeah.
I knew you would love us. I told you.
Yeah. She got me out of my bubble.
The black one.
Hey, this is me. Where do you live? He said PB, and I'm like, I don't know what that means.
Pacific Beach.
No, Palo Verde. Palo
Verde.
Verde. And this is me. We're not that far.
Well, look, I kept driving, right? I kept driving, and I'm like, okay, am I there yet? Am I there yet? Am I there yet?
We're just close
But you know what?
by.
I'm glad I'm here. I'm really glad I'm here. So look, I work for East West Bank. So I have a program that I'd like to share. But as I was sitting there, I was thinking, great, another lender up here talking to you about what we have, right? So what I'd like to do is maybe have a little bit more different conversation, because I think that our program is designed completely different than anything you guys have really are used to, okay? It is a loan, obviously, right? So let's talk about, so what are the problems or the issues that you guys are seeing right now with buyers or just the market in general?
Interest rates too high.
Okay. Great.
Notifications being too harsh.
Okay, there you go. Qualifying. Now, when we're talking about qualifying being too harsh, what are we talking about?
We're talking maybe
2 years of income, job, 2 years of job. It's not good.
no late payments in the last 7 years.
Yeah.
So late payments, right? Late employment. What else? Now, when we're talking about rates being high, what are we talking about?
Another thing, affordability.
6 points.
For affordability, but what are we talking about specifically in numbers?
Well, the mortgage payments is too high.
No, rate wise.
Right.
So who's kind of pre-qual in the last 24 hours here? Sixes, sevens maybe, right? So let's say 6.5 to 7.5, right? Depending on the type, right?
Right.
What about alternative loan programs as far as qualifying?
The 2-1.
The what, the 2-1 buy down?
Yes.
Don't get me started on that, but
I
anyway.
just heard that one down. Working on it.
Now, before I get into that, I'm just gonna give you, so look, doing loans is the only thing I've ever done since I was 18 years old, right? I'm not gonna tell you how old I am, but it's been a long time. And this is great as a gimmick, right? But here's just my opinion, right? If the buyer buys the home because they can afford the payment that the 2-1 buy down gives them today, with the hope that they can refinance 2 years from now, where are property values going? Are they going up or going down?
Down.
So in order for somebody to refinance, right, the property has to be worth more than they owe. So you guys gotta be careful with that. Not saying not to do it, just saying be careful.
Because they can lose their house.
Yeah, I'm just saying, just be careful, right, with that, right? So what I'm saying is that, look, if someone can afford the 7%, 7.5% or whatever the rate is, right, then so be it. But this is just my own personal opinion, okay? But if they can only afford the home at the 5.5%, we gotta be careful, because what if they can't refinance? And that's the whole, for you guys that were here in 2004, that's what happened. What happened was people were getting the adjustable rate mortgage at
They were stuck.
4.5% with the hope that you could refinance. Properties dip, they can no longer refinance, then you have the adjustment and boom, we're screwed. See what I'm saying? Yeah, exactly. But anyway, I got on the soapbox there, but I'm off. Alright, so we're gonna raise this. Alright. But I have a solution for that though. credit that could be used for the folks that don't have much money to close, right? So now you have to use it to buy down the rate. See what I'm saying? But anyway, so our rate is 4.625. That's on a 30-year fix.
That's your rate right now.
That is our rate.
Yep.
A year ago, our rate was at 4%,
Sing it.
right? So we've only adjusted by that in 12 months, right? So when people tell you, or actually when people call me, and they're like, dude, what's your rate? The rates are so high. My thing is, not me. Not with me. So we're here, which helps you with your affordability issues that you guys are having, right? So, also, when your people are 20% down, what do they gotta pay?
Those costs, PMIs.
Do you think we have PMI? Now we ain't got no PMI. So then what happens is that, see, now you see what it's doing to your affordability? Right? The DTI. Anybody know what DTI is? And how does that affect your affordability?
A lot.
A lot, right? It limits, so for every dollar you make, your borrower can only spend between 45 to 55%, right? But this is not really 55 because you gotta take away the PMI. It's more like 48, right? Our debt to income is 55 over 55. Right? So now you see what I'm talking about now? It's stacking. Now you're way up there.
Why don't you have no PMI?
Because, good question. So,
Don't do that.
No, it's a Let me give my spiel.
Over.
Okay, so understand this, Lorena, and everybody in here. So East West Bank is a bank that mostly this program has been around for 15 years for them. Alex is part of the risk aversion section of the bank. They're not promoting this loan. They don't want the whole world there to do this loan. We're very blessed to have him here because what happens is that what they're trying to do, they're trying to get more brown and black people in the books, okay? Other minorities in the books or other people besides Asians, okay? So what they're doing, they're giving this program that doesn't exist anywhere in the whole world. So they're creating it to avoid risk, to avert risk. So it's not gonna make sense. Why are you doing that? Like, he's not here to ask for our business. I begged him for 5 months to come today. He's not here to ask for our business. He doesn't need to be here.
No.
I just want you to understand, this program is not gonna make sense. It's a conventional loan, 3% down, no PMI. Hey, no PMI, no lender closing cost.
Yeah, I get to that.
Well, let him get to.
So listen to what he's saying, and all you have to know that we're part of a very blessed group that gets to offer this to clients because no one else has access to this. Period. It doesn't exist.
Well, I'm blessed to be here, right, in front of you guys, because look, we do need to hit numbers, right? We do have a specific number that we have to hit. To answer your question, she did a great job of it, but East West Bank is, and I'm not gloating, I'm not, bragging, but we're the #1 ranked performing bank in the U.S. And we're the largest portfolio lender in the U.S. Now, do you guys know what portfolio lending is? It's basically.
Banks come get
You
money.
don't sell to the secondary market,
Yes.
you carry your own paper.
Yes, so banks, the lenders that you typically are working with that say they're direct lenders, are typically getting a loan from us.
Yeah.
So the money comes from us. So what happens is that the reason it has no PMI is because it's our money. So with
Love
you,
the money.
you guys can do with whatever you want with your money. So that's what we do, right? Now, we're not crazy. You may think, well, how are you guys making money when everybody else is here? Well, there's so many different people involved, companies involved in your traditional lending that the rate needs to be higher because it needs to pay off so many different people. You see what I'm saying? Sorry about that. So what happens is that we offer it here because look, we're still making 4.6%. And have you guys seen a client's closing disclosure?
Yes.
The Truth in Lending? They start off with 300, but how much do they pay at the end?
Oh, wow, 3 times.
900. So guess what? The bank's gonna be okay. You see what I'm talking about? The bank's gonna be okay. So look, so far, 4.625, 3% down payment, no PMI, right, and high DTI. Now, should I just leave it at that? Yeah, right? There's no need for anything else.
I have a
Right on
question.
there, what?
And
Today?
what kind of, yes.
What kind of properties though?
Oh,
Who qualifies for this?
Single families, 1 to 2 units, single families, condos, townhomes, and manufactured homes on permanent foundation.
Does it be years, possible home?
Is that your mother? I'm very ready.
July 1976. You see, that's why I like having conversations, because you see how it just, it flows, right?
And it's for owner occupied only?
Or investment?
Owner occupied.
For this program, it has to be owner occupied, but you do not have to be a first time home buyer, and you can have one other property. So it could be your rental
Lore,
property.
rent yours by another.
Yeah.
Yeah.
What is your turnaround time?
Mira, mira.
Right
Rent
now,
yours.
45 years,
Norma.
best case.
What is it, I'm sorry?
Okay.
45 days.
I told Alex, every one of my agents needs to get a house themselves before we go out for this. Like, all of you, I'm encouraging you, you need to apply for this. If you already own a house, rent your house and buy another one. If you don't own a house, buy a house. Like, this doesn't exist, you guys. Where are you gonna get, you're just saving on $12,000 just on closing costs alone.
And wait till you hear the requirements are made.
No PMI.
It hasn't even got to the juicy stuff yet.
No,
Not yet.
not yet. Not yet.
Open your mind and prospect. Call everyone you know and give them this program.
Yeah.
Well, look,
What's the worst case scenario? You tell me best case scenario is 45 days. The truth of the matter is what?
45 days. Best
Right-
case,
right now.
45 days.
We're gonna be richer.
So-
Things have changed.
Yeah, best
Worst
case,
case, worst case is what?
maybe 60, or 80 maybe?
Oh, Jesus.
I mean,
Well, that's a real
well,
complicated
I'm just
thing.
being honest, right?
Yeah.
3 months.
But look, but here's the thing.
That
though.
was a 10 number.
Look, here's the thing though. Here's the thing though, is that, yeah, it could take forever, right? But your client dictates that, right? So because we're so flexible, it's almost easier to not, it's easier to qualify than not qualify. As long as you stay within the parameters, right? Which is, let's do here. 660.
Take note.
660 FICO. If they have a FICO score. You know what I'm saying? So if they have a FICO score at 660. If they have no FICO score, we're good. Just give me 10% down.
Do you believe this? No.
Hey, you guys taking note?
And tell them that I-10 qualifies for this too.
Oh, yeah, that's another program.
Yeah, well, it's the same thing. It's one program.
I-10 qualifies for 3% down, Loren. Where else in the world?
5%.
5%.
Well, look, I can do it with 3%, but I'd rather do it at 5. You know why?
All right.
Because people don't believe me. I guarantee you, maybe not, but I guarantee you that there's been offers that you guys have received on your listings with my letter, and you guys found out it was I-10, and you found out that it was at 3%, you called me, or your lender called me, and he said, I've been in the business for 25 years, never heard of this, right? So what I did was, I just said, you know what, let's do 5. It sounds more believable. You know what I'm saying? But we could do it at 3, but I prefer if you guys stayed at 5. Now, no FICO. Have you heard of non-traditional credit?
Yes.
You know, they ask you
For the
stuff.
bills and stuff.
Yeah, you don't, no, like, no. So we're good. Just give me 10%, I'm good.
Wow.
You know? The reason is because guess what? Does the client paying a light bill represent his ability to pay a mortgage? It doesn't, in our opinion.
Well, if you don't have solar nowadays, it does.
Well, yeah, but guess what? What we look at is we look at their income, we look at, you know, their income primarily. Type of job, you know? Now, as far as how many years do you typically need for employment history or income?
24 months, 2 years.
Yep. 2 years, right? You only need 1 year? of income. Now, you notice how I say income, I don't say taxes, right? Because this is fluid. So this goes in different, it's like a branch. I could do 12-month bank statements. I could do it with a V loans only. I could do it with a P&L only from a CPA.
That's pretty low.
Yeah.
Get the way back.
Right? So look, if you guys are getting the gist of it, it's really intuitive. So what we did was when we designed this program, you know what we did? We sat down and looked at what are the issues that FHA has,
Yes.
right? The issue with FHA is they won't do this, right? But also, we could do, actually, 3 times 30 the last 12 months. And I'm sure you guys have had FHA loans fall off because they've had like a bunch of repayments in the last 12 months, right? So we address that, we address this, we address that. The FICO used to be lower, but we've increased it, just to, you know, we kind of have to make it a little bit stricter, right?
If the FICO's higher, doesn't mean anything.
No.
Better.
So look, this loan is like a better for worse. It's like marriage, right? So what happens is that, look,
You're gonna get the benefits in California.
yeah, look, if your FICO score is 800, that's awesome.
Yeah.
Happy for you.
Good for you.
But it doesn't affect your rate. If your rate is 660, we're still gonna give you the rate, the same rate. So there's no, you don't penalize you for having, you know, a lower FICO. Yes.
So let's per se, a client gets qualified with this. Down the line, for whatever reason, they want to refinance into a different loan, can they come back to you and there's still no PMI, or if they go somewhere else, they're gonna get hit with the PMI?
Well, look, the reason we designed it, so check this out.
They don't need-
One of the
they can
reasons
stay
we
there.
removed the
Stay there.
PMI, the reason we removed the PMI and we give you a rate below market is because we don't charge you any points. So if you don't have PMI, right, and you put down 3% down, so let's say you bought the house for 650, right? And then it's been 5 years, right? The property went up maybe, I don't know, 700, right? And you paid it down to 640, right? You're still not gonna have enough equity to avoid the PMI. So yeah, the rate may be lower, but why would you?
Well, yeah.
So the reason we designed it that way was kind of on purpose. It's to keep you, because we're making money off of this, not by gouging you at the beginning.
And can I say something?
See what I'm saying? So it's long-term kind of design.
And no one else will do that, because everybody that you go to get a loan with, they want to sell it to the secondary market because they're wanting to make money on top of money. They're securing their money. And in this case, the bank is securing your loan, and no one else is doing that.
Well, it is, and it's also the fact that they have to sell it off because their money, it's not their money.
It's not their money.
So they can only hold us for a certain amount of days, but they gotta get that money back.
And then,
So,
and then one more thing that's a
Yeah.
perk for a lot of people is that sometimes some people miss one payment or 2 payments, whether it was COVID or something.
Mhm.
And, or maybe identity theft, it happens to people and they were behind their payment because their account was locked. With you guys,
mhm.
you still get a loan if it was in the past 12 months, right?
Yeah, they don't-
Instead of 7 years, they're gonna ding your credit, they're gonna punish you, you're the worst person, now you can't even buy a house or your interest rate is even higher.
well, yeah, I mean, so,
And you gotta clean your credit, do you refinance by any chance?
well, yeah, they do refinances, right, at the same rate. I think a big one is the student loans. I know student loans killing a lot of people,
Yes, yes, what about it?
we can exclude them.
Alex, how can my agents get more listings with this program? And don't think of how you can get more buyers, think of how you can get more listings, and how can they get more listings with this program?
Well, yeah, see, so this is, again, this is just my opinion. But yeah, this is a good program for the low-hanging fruit, which is your buyers, right? But I think that it's better used in this market for your sellers. Because guess what? I mean, and look, I'm gonna repeat myself, but every single seller out there, they're trying to cash out. They wanna cash out. But when you tell them, hey, you know what? How about we cash out, you do the presentation, sit on that, and then boom.
I have a question for you. Why can't you, stamp up a little section? I used to work for Mortgage for many years.
Yes.
How come you can't stamp up a little section just for you to do the legs? So we could have.
I offered to hire a loan officer and pay a salary if he only did our loans. I told
You
him,
hire somebody.
I said, I'll hire someone just for us.
Because
for my
another,
office.
I mean, this is amazing. Another key component to this is customer service and communication,
Right.
right?
Well,
That
you
goes
just-
hand in
Well,
hand.
we can't have it all, right?
No, well, no, what I'm saying is that if we're looking ahead and we're promoting this, even within our, that's why I said for our KW office only, I'm not saying for anybody else, that, I mean, that would be amazing because this will open up so many doors for you, for your portfolio, and for ours as well.
Right.
That it'd be worth paying an additional and.
I love that, and I want you to hear me on this, you guys. I said this earlier in the private meeting. I want you to hear me on this. You have to understand, the Alice, they only, the way it works in the back end is that, like he said earlier, like, Bank of America has a new program that's really good. The only reason they're doing that is because year ends come and they're looking at their portfolio, and they didn't meet the criteria, they didn't lend to enough brown and black people. So they have to create a program to meet the regulations. Does that make sense?
Yeah.
So client experience and customer service is not a priority. They have so many applications, they can't handle them. Even hiring 50 people, nor do they want to, because they're only trying to meet the requirement needed. So this is what you do. You go to your client and you say, listen, either you don't buy, don't sell, or I'm gonna get you a program that doesn't exist anywhere on the planet. You know, you have to be patient. It may take 45 days, it may take 60 days. I will collect all your documents up front to submit a complete package, because if you give them a name and number, they don't have the time to call, chase your leads. They need full packages. So then when you just set the right expectation, you tell them, look, I'm not gonna have updates for you. We're not gonna have updates, but you're gonna get this loan with only 3% down instead of 20, right? With a no MI, 3% down, no closing costs, and you're gonna get a 4.6 when the whole world has a 7. So guess what? We're not gonna have a good client. You're not gonna have communication and updates and all that. So it's up to you as the agent to not be upset and say, well, they don't call me back, they don't give me updates. Well, you know what you're getting yourself into. So you just have to set the right expectation to your client, and you pick up the paper. Yes, Christina.
Okay, and also, we have to learn how to sell this to other agents because they're so apprehensive. They wanna fight you, they wanna cross-qualify you, this ain't real, you're lying, so on and so forth. So, at one point, I would like to help you guys, you know, get that lingo and get them to understand that this is real. And because Alex has helped, and he was wonderful, he took my phone call on a Saturday, it was a text, and the other agent accepted our offer because she goes, this is impossible. And I submitted 5 offers, and I talked to each agent about this program. I had to because they didn't believe it when they saw the offer, and they all accepted them. It was up to my client to choose which one of all those offers.
And here's a tip on how to get your offer accepted. First of all, 4 months ago, you had to beg people to take this offer.
Yeah.
Because you're like, wait a minute, this program, you guys have to understand, it doesn't exist. This is the only presentation he does in a real estate office ever. Like, he doesn't need to go promote this. The people that got the loans, they tell all their friends and family. He doesn't need to advertise with realtors. Make no mistake. Like, the way I see this, he's doing us a huge favor by being here. He asked him how many times I text him in 5 minutes. Like, I beg, you know? and I got him here. And the point is this, because where does this exist? It doesn't exist. So this is how in this market, they'll take your offer. Because there's no buy, okay? In this market, they will. Yeah, blessed. But let's just say they don't. This is what you do. Remember, your client is not paying lender fees. So what you do when you write the offer, you write it with a per diem pre-agreed. You write the offer, say, I'm gonna buy this house, and if I go over 30 days, I'll pay you $100 a day. And you tell your client, look, you're saving $12,000 on closing costs, $15,000 on lender fees. Guess what? Pay a per diem of $3,000 for the month. Who cares? Does that make sense? It's up to you to.
And you qualify for more because you don't have PMI and you can go on.
You don't have PMI. You can go on. You have more. Like
You can sell this product like this.
Yeah.
To anybody, anytime.
This is what it is, and remember, they're doing a portfolio. I encourage all of you to get to, and don't work against it and compare the program to what you're used to.
Right.
I'm not gonna kiss your butt and buy you lunch. Like, you have to kiss his butt and buy him lunch. You know what I mean? Like,
You're not gonna have to buy lunch ever!
but you guys, like, for real, like, this is a huge advantage for us to as the market changes, this is how you get, your sellers wanna sell, but they don't want the 7% interest and they can't afford to buy. This is how you go get listings. You tell your seller, listen, you have equity, sell right now, cause now you get to go buy another house. You could actually you could rent this one and qualify to buy another owner occupied, or you can sell this one and buy one at 4.675, 3% down, 30-year fixed, no MI, no lender fees. For God's sake, you all need to apply for this loan yourselves. And remember, this is not you give them a name and number. This is you get this checklist and collect 2 years of tax returns, all pages, the W-2, the pay stub. One year. Whatever he asks you for, give it to him.
Or just PMI alone.
Give it to him. Get him copies
No,
of the
P&L,
government. Like,
P&L.
do the footwork and give him a complete package with an escrow already. Then they're gonna work on it.
And
And
is this gonna be a 1-year P&L or 2-year P&L?
1 year.
1 year.
when they're P&L.
The sweetest spot ever. You're the best
Yeah,
part.
go get listed.
Thank you,
Go
Sophia.
hire sellers.
Sophia, please, you forgot one part, guys.
Yeah, but
The
this-
3% down. Remember?
The difference in this market, I think it'll be-
So the minimum down payment.
Survey, pay attention to this part, please.
So the minimum down payment is 3%. So we only need 1% from the buyer. Right? So the rest can come from wherever.
So new construction came in with 2%.
Because 1, that's 3. We're good.
Yeah.
Right?
Wait, what happened? I missed it.
Say that again.
No, look, and what I'll do is I'll send you guys kind of like an overview with bullet points. But all we need is, look, we need them to get to 3%.
However they get,
However they get there, as long as 1% comes from the buyer.
they're being
You get
safe,
it?
basically.
Yeah, well, yeah, it's gotta be in there. Now, the gift, you reminded me of something. So when you guys get a gift, normally, what are the items you need?
You need proof, a letter.
A gift letter.
A gift letter and a bank statement.
And the bank statement market.
All I need is a gift letter. All I need is a gift letter, and the funds don't have to be sourced, as long as the gifter sends the money directly to escrow.
Under the matches money.
You understand what I'm saying?
Repeat it again because I love
So the gift doesn't have to be sourced as long as the gift comes direct, is from the gifter, goes directly to escrow. I don't need to,
Look at that, bank statement, nothing.
nothing, I don't need none of that. But the account number has to match with the account number.
Yeah.
Yeah, but I don't need to source it. Now look,
Wow.
now,
Wow. OMG.
so now one thing that you mentioned that kind of brought something to my head is, look, we try our best to be traditional in our approach to the service that we give the agents. We try, but we just can't. We just can't. So I'm gonna tell you something, is look, the agents that are using this product, we're probably only using maybe 12 agents in 8 different states. But their average closing for each of these agents is probably upwards of 150 sides. Right? So the reason we don't promote it, right, is because the partnerships we've had, like here, right, are with strong organizations because of the product that it see what I'm saying? But they don't promote it because it's their secret sauce, right? So so what happens is that we try to give you updates every day. We try to close it in 15 days, right? But we're not the lender whose value add is to close your stuff quick, right? Our value add is different. We're not, and I hate to put it this way, but we're not McDonald's. You know, our meals have
Substance.
nutrients to them. You know what I'm saying?
I don't know.
No, I eat McDonald's all the time, look. You know? That doesn't mean you don't eat it, but you eat it in the right circumstance, right? The seller has to close quickly. Alex, I'd love to use your program, but I can't. I'll be the first one to tell you, dude, nah, I can't. I can't do it in 15. Go somewhere,
It's okay to do
Go
somewhere.
somewhere else.
Pay more.
If they're putting 20, 25% down, don't worry, I'll come back. I got you. We'll refinance you because they have an effect way, right? So, but that's the thing about our product is that the referrals, we have an inbox where you can send your request security request.
PQ.
Right. Now, that CCs me all the time, so I get notified right away, right? It's taking us between 5 to 7 days. If the client sends a complete package.
You'll send us a list of what it is.
Yeah, I can send you a list of that. Right, if they send a complete package. If you're sending us a name and number, good luck. Just being straight up. Because you know what? It's just, our team has to generate enough business for 6 different states. Right, and we're not a big team. We probably have, as of Monday, 7 loan officers. You know what I'm saying? So, if you're sending a name and number, it's tough, because they have to call, and then the customer didn't return the call, and it's just so much, right? But if you guys have the list, and you guys have a scenario, you guys can call me. You can call me, right? You call me, you're like, hey Alex, look, this is what I got. Boom, 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 we can game plan, put it together, we can do Zoom, but we really would like, if you guys can collect those documents, scan them, send them in there. That works best.
How come you don't hire? Because why don't you hire more people to capture more business?
It's because we do have a lot of people.
They only have to meet us in the quarter.
No, it's not like that.
That's it, after that, it's like you're done.
No, it's not like that. No, we have a lot of people. It's just we just can't keep up.
Oh, there's a lot more demand.
Yeah.
Since
Is
you
there
guys
an
have,
online application or?
No.
Or
No.
they have to go directly, like if I got you a packet and they did the app?
You get the
Send that in.
application.
Yeah, you send that in, right there, we review it, we send you a pre-qualification with a loan estimate for,
But to apply,
That's
they have
PA.
to speak to you?
PQ.
There's no
No,
like online?
no, a 1003, no.
yeah, we do
Not
have a
like-
1003, but it's not online.
Not like,
Oh,
complete
can I
it
take a
before you-
703?
Yeah. But the 1003 is not
I'm like,
it's not fully, it's just name, number, social security number, just, yeah, it's just amazing. Where they worked at for the last day.
and just want to remind people, when they initially do everything, it's a soft pull credit. It's not a hardcore inquiry. Okay. Until once you open escrow and then the underwriter, then they go
And they
through,
pull the whole
and then
thing.
they pull the whole thing at that point.
That's because we know I-10 loans.
So we ourselves need to know what it is that we're giving. We need to verify certain things because it can fall out of escrow. And once you're open escrow, and because they have not done a full credit. Review with your client what it is that you're providing.
What was that?
Income.
What would be some things that, she's talking about the soft pull, what would be something that would fall out? Say,
But-
what else can
Income.
I do this?
Income.
Besides-
Believe it or not, we really don't have issues. We close probably 9 out of 10, right? I would say 90%. The reason they typically fall out is because we're pushing beyond that. Meaning, they qualify for 380, but you need 385 and we're really stretching it out. Right? We're really kind of pushing it. That's typically the number one reason.
We have a question back here. We want to know, does this have an expiration date? Like, is this
No.
program only going to be offered till February till you guys hit that?
Once you get a pre-qual letter, it's good for
No.
all of them.
Okay.
90 days. So look, I know that most of these programs, people are used to them being
Supplies last.
yeah, supplies.
Like, this is so good, right?
But look, our loan, so I'm gonna go into deeper explanation. So
We
look,
really appreciate this.
so look,
Don't forget to give us your number.
so look guys, what happens is that my job and my team's job is, we're responsible for 12% of whatever the bank does, right? So if our bank is closing about $1 billion every 3 months, right? So they're closing about $4 to $5 billion in funding, right? My goal is I have to make sure that 12% of whatever they generate is to minorities. So
We got you.
so it's not like limited, right? It's not limited, it's ongoing because we have that.
I got a quick question. So, I mean, it's kind of common sense why you guys have a high volume of people applying for this.
Right.
And then now that you're helping us out, we appreciate it. You're going to get a lot more volume. Is there anything that you guys are doing or considering perhaps to offer structure on how to be able to handle all this volume we're gonna be giving you?
Well, we hired a loan officer specifically for the IE. That's the reason I'm here. Because before, I wasn't coming. I was not because I value you guys, but because I just knew that.
You can have this.
Because here's what's gonna happen. And I hate to use this, what's gonna happen is that you guys are gonna go, right? Start hitting North, San Diego, boom, 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 start hitting, right? The agent's gonna call me,
Yes.
right? And guess what? There's a big chance we're probably gonna get that out there quickly. They talk to me. Boom, we're gonna get it done, right? They're gonna find out about the product. Right?
They're gonna want it too.
And then what's gonna happen is that,
Snowball.
boom, you're getting infected, boom, 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 yeah. And that's what happens. Yeah, and that's why I was really hesitant until I had the proper staff, at least one loan officer dedicated to this region, before really.
You should have never talked to Sophia, because Sophia.
Well, she got infected the same way.
Yeah.
She got me on a Saturday at like 7 in the morning, right? And
You're
of course,
lucky,
I answered-
you're lucky it was 7 and not 4.
Are you guys like peeking the brain trying to take over the world,
Who?
the bank? Because it's gonna get infected.
Well, it is, but the thing is that the bank, the general bank, has some awesome programs,
Right.
right? I don't really promote those because that's not, every time they do a $10 billion loan for a $10 million for a basketball player, guess what? That just to me tells me, damn, dude, that means I got a 10 or 12. Yeah, 13 and a half loan. See what I'm saying? But they do have some awesome programs like, you know, no income verification. They do some.
Tell us about that one.
Sorry, I was online when you went over the second homes.
Yeah, so you don't have to be a first-time home buyer,
Okay.
and it doesn't have to be your only home. You can
Okay.
have another home.
Okay.
This one just has to be primary residence. So it
Okay.
can be like your separate home.
So that means the square footage has to be, larger than the one that you're.
Not necessarily, but as long as we have a good reason. Because they could be less, right? If mom is disabled, two stories, or one, there's gotta be a
It has to make
compensation.
sense.
Yeah.
That's the VA reason. Do you have anything for as vacation homes again?
We do, but, that's where you get hit with the 40%. So, we have this program, and then everything else we have is 40% down, but there's no income qualifier, and there's no FICO score requirement. Yeah, you give me 40% down, you get a loan,
Oh,
and I
dang.
don't care what your FICO score is.
That's crazy.
Yeah.
That's awesome.
I don't think there's a loan limit. See, that's the problem, right? That's what I have to fight against, because they're just slamming those left and right, so then that generates more business for us on this side.
Yeah, because that community does a lot of cash buyers.
On the 40% down, what is the interest rate? on
It's
that one?
between 6 and 7.
6 and 7.
Yeah. So, 6 and 7, because it's really kind of like a hard money loan, right? It's really like a hard money loan without the hard money terms. Because think about it. You give me 40% down, right? What's the likelihood you're gonna let that go? And if you do let it go, guess what's gonna happen? Fine, I'll keep your 40, I'll resell it, make that money back. It's just great, you know what I'm saying? Yes.
Is it a 30-year loan?
The hard money, no, the longest term it could be is 10 years. So it's a 10-year fix.
For the hard money?
Yeah, well,
Well, for the loan,
for
for
asset
the
qualifying.
6 to
No,
7.
not before the down.
Yeah, the 40, okay. I want to think about the first one. Let's think about the first loan.
Let's say, because when, as we're really a buyer, right, we submit an offer.
Yeah.
They want to talk to us as agents, and we can be really good at talking to them about it, but if they want to cross-qual, or they want to talk to someone, how does that process gonna look like with someone receiving some product like yourself?
You're gonna, trust me, if we're at that point, I will pick up your phone call. So don't get it twisted. It's not like we're not answering questions.
I'll call him
No.
with you.
He does
No.
talk to the other agent.
So we
And
have
then
to
you can
call you
also-
or the loan officer?
He does
Well, we have to call you or the loan officer?
No, I was gonna bring her here, but she's in training.
Is it Jennifer?
No.
Also,
Jennifer's
We got a new person.
handling, Washington.
We got a new
another
person
thing that we use for
specifically
this
us.
office is that people ask, have you done this loan? And the answer is yes.
What's the
And
average
that's
close to days on it?
it. Right now it's
45.
45 days.
45, okay.
Yeah, 45.
You can watch the recording back.
Yeah.
But right now you don't have to worry about the competition. The thing with this.
But that's mainly for I-10.
Because, you know,
I took the old
the people are desperate to take it off.
Like, everything is relative, right? So here's what I mean by relative, right? If you send us a complete package, right? A complete package. Because look, this program is so open that the last thing I want you guys to do is start throwing everything against the wall. Oh no, they'll do it. No. No. That's not how you should be thinking about this product. This program is for people who want to buy more than they can afford, but are qualified. Number one. That's what it's for, right? Beer, budget, champagne taste. That's what it's for. But they have their ducks in a row, right? Or it's meant for the business owner who doesn't file taxes. But guess what? Guess what I tell the business owner? You better have money. Because if you didn't pay taxes, I hope you didn't waste it on that escalator. You know what I'm saying? Because if you didn't pay taxes, you better have that.
On that razor.
Because if you give me 20%, just give me a P&L, and we're good. See, those close fast. It's the ones that have 1 year taxes, but they have like 8 different jobs. Because then I have to do verifications on every single one of them.
How fast can you close the one with the P&L plus 20%?
Those are probably close to 40 to 45 days.
40%?
Yeah, because it's only a P&L.
Did we ask this question already? There's a question on here. What if a buyer is receiving cash as income and then it gets converted, getting paid by personal checks?
If they file taxes, we can use it, or they can do bank statements.
All right, Myra, are you watching? He says you can use
Bank statements?
bank statements
Or tax returns.
and tax returns. Perfect. So we have a lot of people in our life.
Yeah, look, I mean, look,
What else?
it goes on and on. Bonus, overtime, you only need 1 year history of it, which is huge, I think. Bonus or overtime is big time.
Yeah, because COVID, that's I'm hearing a lot of that from
Yeah.
buyers. COVID, their income went down, so now they only have one strong year once everything opens back up, so they're not qualifying for as much.
But now they can.
Because now they can, right?
Yes.
Some contractors might do 12 jobs a year, get 12 W-2.
Mhm.
Is that okay?
Well, it's fine because they're gonna file their taxes. So in that case, you would go off the tax return.
Gotcha.
You see what I'm saying? And what we verified is that he's a contractor, not that he worked at all these individual companies.
That's awesome.
Well, I don't necessarily mean his contracting company. He's an independent guy. Let's
So
say
you got 12 1099s.
No, it's usually W-2. My son-in-law went through this just recently. It was hell getting a home back in Ohio. But they had like 9 or 10 W-2s, and every loan officer looked at him, you're a job hopper, I don't need this crap. You know, well, it's not really the way it works, that's the way it works in that state.
Does he have like a 2 year history of having had multiple jobs?
Many years.
Then he's good. He would be good. The way that would be treated though is that the tricky part for him is that he's gonna have a current year to date pay stub. Right, so we're gonna need a pay stub from the last pay stub we received from all of those jobs that he got. You see what I'm saying? But, yes.
Last question, I'm not gonna bug you no more. So if we haven't, since your bank was saying that you guys have a lot of Asians that you guys mentioned, if I have a current Asian client, is that gonna be thrown down because it's not in the minority?
No, we're not gonna keep them out.
I'm just saying, I'm asking it to me.
No, we're gonna give him a loan, he just doesn't count towards this percent.
Oh.
That they're trying
So
to
he
get.
got to do extra work because he have 2 out, now you got to do
Hey,
another one.
I told earlier, I said, so my white people don't qualify? He goes, of course you don't say that. And then Phil goes, I feel better now. Right, Gary?
So obviously, we go into the transaction knowing it's gonna take, at least 45 days to close, but more than likely we set the expectations to close in 60, over, under promise and over deliver. So what would you suggest we put like for, a time frame to removing contingencies? Because that's what everybody's gonna wanna know, but when you guys gonna be able to remove contingencies?
The appraisal typically comes in fast.
Yeah.
It'll come in, typically, right. The loan contingency is, typically 25, you're gonna get a loan approval within 23 years of doing that, I've never told and will never tell you guys to remove a loan contingency. What I'm gonna say is, look, the loan is approved. Here are the conditions. Let's have a meeting with your customer. Let's see his level of comfort with the conditions that we're requesting. And then you guys can make that decision based on that. So what I'm trying to say is,
Hold your horses.
25 days, I would say. Yeah, but you'll get an approval quickly.
Right. And then that would basically dictate how challenging it's gonna be.
You had on the phone
or
this
how
morning when I walked by, so I
easy
couldn't say
it's gonna be to actually, so if it's basic stuff like, yeah, updated pay stuff, this and that, which is standard, you're like, yeah, no problem, now you go to remove it.
Well, yeah, but look, guys, here's the other thing.
That's why
Remember,
it's
there's no
interrupt.
fees. Right? So we used to have fees, but the reason we removed the fees is, you know why we removed them? Because if we needed more time, then you can offer up that per diem.
You can play with it.
You see what I'm talking about? So guess what? Worst comes to worst, that agent's like just over you. You're like, look, just pay your per diem till we remove the loan contingency or till the close of escrow. Now, you don't want to pay it if you don't have to, right? But if it takes you, if you're doing $50 times 20 days, that's $1,000. He's still way ahead.
Even at 100.
Yeah, even at 100.
That's what you're gonna do.
Hey, let's start with $50. Let's keep as much money as we can keep.
No, I'm not saying do that.
Yes, but in the event of, you have leverage, you have room, yeah.
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 Yeah. Now, the only thing I'm gonna warn you guys about the I-10s, we don't process them any other different than any other. They're just the same for us. The thing you have to be careful that you have to ask for folks is when they're using their social to work, some of them use their social to acquire debt sometimes. And then they tell us, no, I don't have any debt on my I-10. And then when we do that full review, guess what happens?
Bunch of that shit.
Everything comes in. So then, boom, it kicks them out. So you just gotta confirm.
And then you can tell which I-10 is real and which one is not real.
Well, yeah, because we do an in-depth review and just, we put them through the ringer when they're doing IT, right? But yeah, just confirm their FICO and confirm their debts. And just tell them, oh, I don't have debt. No, I don't have debt. No, I'm talking about both. What are you talking about both? I know what you're talking about. You know what I mean?
Yeah.
Just,
You know what I'm talking about.
Well,
You know, yeah.
and see, we hardly, some of us have hardly ever dealt with I-10, so this is good to hear.
yeah, just,
All right, y'all. Out of respect for Alex's time, and
Aw.
like,
Can we keep him?
I know.
Welcome to your new office.
Let's welcome
Get
him.
a seat to your new office.
We kept